Today, the stock market was choppy and had a lot of indecision as traders and investors brace for CPI data this week. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So today SPY was up 0.03%, and as you can tell, we did bounce from that support zone right around 411, but we're still below the resistance at 414. And this is a very ugly chart with lots of gaps above and below, with the gap above at 415 and 421 and the gaps below at 407 and 401, and then down here at 396. So when you get a chart like this with lots of gaps, we know without a doubt these gaps are going to get filled. We just don't know what order they're going to get filled in. Now you could say not all gaps get filled, but I can assure you all of these gaps are going to get filled. We just don't know the exact date. So for that reason, I'm going to give you a very simple trade plan. And yes, there is a lot of things coming up in the horizon with CPI data and the debt ceiling. And those things do matter, but we are going to let the price action tell us which direction we want to go from here. So if we are going to get the bearish scenario, quite simply, SPY needs to lose this support at 411. So anytime price is below SPY 411, you are instantly getting a lot more risk off for the gap fills below. The critical support is all the way down here at 404, but you do not want to take that much risk, so you need to be managing your risk right here at 411. Now, if you are bearish on the market, you need to manage your risk up here at 417, because it's only if we break 417 that we're going back to those August highs. So bears need to manage your risk from 417, or you could use this lower risk level at 414, but your critical risk level will be 417. Bulls, your critical support and your critical risk level is right here at 411, because as I just told you, 404 is too far to the downside and you cannot manage risk that low. Unless you are super bullish and you think the market can go a lot higher, you need to use this risk level right here close to price. So it's really going to be that simple. We need to manage risk from these levels, and keep in mind when we get these data drops, price moves very quickly. So if you are swing trading, you need to control risk with position size. There's a good chance this could be a very boring week and we just chop between this range. And you can define the range right now at 411 to 414, or the wider range of 417 down to 404. I can quickly draw out an example where we just chop around in this range, close two of the gaps, and then just continue to build out a wedge before we get the breakout sometime later in June. I'm not saying that's going to happen, but it's obviously a possibility where the market just bores everybody to tears and just continues to chop around in this range. So have realistic expectations and don't force any trades, because when markets are very boring and they're trading sideways and they're in a range, people usually take on unnecessary risk because they don't have the patience to wait for the breakout. On the NASDAQ 100 triple Qs, we were up 0.25% today, and as you can see, the triple Qs are still looking bullish with that higher low breakout into another higher high close. Now with the triple Qs, I think our limited upside is going to be that double bottom price target at 327 and then the August highs in the low 330s. There is a very slim chance we are going to blast through the August highs and go back into a raging bull market. So if you're bearish, you need to be managing a risk from those upside resistance levels. Keep in mind, this is still a bull trend of higher lows and higher highs until we start breaking down, which is going to require a breakdown below 316. If you want to stay bullish, I would manage your risk at this higher risk level between 320 and 321, because if we break that, we could easily come down here to fill the gap below 315 and 308. We're still above our support trend line, so once we get to that gap fill and support zone, we'll have to assess the chart to see whether we're breaking down or we can start to get a bounce. So if you look at a very simple risk assessment, if you look at the August highs, that's about 2.8% to the upside, and the gap to the downside is about 4.7% to the downside. So without a doubt, bears are getting better and better risk reward ratios, so do not be surprised if we start to see the high volume selling coming into this market. I'm not saying it's coming, and I'm not telling you it has to come right now, but just be prepared for it so that if you see it, you can identify it immediately and you know how to take action. On the Dow Jones, we were down 0.15%, and the Dow Jones is trying to bounce and break the resistance at 337, but as you can tell from the candle, it was rejected. We have the gaps to fill to the downside at 333 and 329, and then we have another gap all the way down there at 322. So if this is going to turn into a rejection and become a lower high, we could start to flush to the downside, and we will start to see those Bollinger Bands expanding. In order to get bullish, we need to break above 337, and then we could come up here and fill the gap at 340, with the critical resistance up here in the low 340s between 341 and 343. On the Russell 2000 IWM ETF, we were down 0.23% today, getting rejected perfectly from that resistance zone between 175 and 176, and if we continue lower, we will be looking for the gap fill at 171. Critical support is 170, and if we break below that, we have this head and shoulders pattern that could take us down to 164 and possibly even lower. The real bull breakout we need to see will be this close above 176, and then we will be looking for that gap close at 181. On the ARKK ETF, we were up 1.15% today, and we did close back over the 50 EMA, but we're still below the negatively sloping 200 daily moving average, and I'm still calling this a bear market in the ARK ETF while we're below 40.5. Below that resistance, we're likely still in a downtrend of lower highs and lower lows, and we do have gaps to fill right around 36 and 32. On the VIX, we were down 1.22% today, and I continue to tell you the VIX crushing is a bullish indication, but you need to watch the VIX each and every day, because if the VIX does start spiking out above 20, we could instantly get a very volatile bear market very quickly. Again, I'm not telling you that has to happen. I'm telling you the price action will tell us when it's here. So simply wait for the VIX to start closing above 20 before you get overly bearish. On Bitcoin, we're currently down about 3.5%, and as you can see, Bitcoin is double topping from 29,500, and that's why it's very important you wait for those bull breakouts before chasing anything, because you could be buying a top. This looks like a double top below 28,000, and if we break support at 27,000, I'm looking for that price target at 25,000. Again, we're not getting bullish until we can get a clear break above this resistance zone at 29,500. On Google stock, we were up 2.08% today, and Google is back on the bull while it's breaking out above 106, and we are looking for that price target at 110. We could go higher than 110, but right now I'd have a realistic expectation that we're going to find sellers at that gap close. You could stay bullish above 106 or this breakout above 107. Either way, you can stay bullish as long as we're above all this critical support, and it's not until we start breaking down below 100 that we need to get bearish. But keep in mind that risk level is getting farther and farther away, so manage your risk right here at 106. On Amazon stock, we are up 0.17% today, and Amazon is coming to a very critical resistance test at this negatively sloping 200 daily moving average right around 106. If we break above 106 and we start to run, we will be looking for that price target at 115. And if we get rejected from critical resistance, that could be a lower high before the next lower low that could take us down towards 94 to 90. On Microsoft stock, we were down 0.64% today as we are starting to cool down since we hit that price target at 310, but we're still above all the moving averages and we're still in a strong bull trend, with the next upside targets right around 316 to 318. Again, I'm not expecting us to go much higher, so the downside risk is still there in Microsoft. So if we start to break down below support at 304, I will be expecting a retest of the breakout between 290 and 293. On Nvidia stock, we were up 1.64% today as we're breaking out to another higher low into another higher high above 289. So it does look like we're well on our way to my price target at 298. We could go to 296, 298, or all the way up to 300. But once we get there, I think this stock will be topping out and due for a correction. Again, we'll let the price action do all the talking, so we're bullish as long as we're above 280, especially while we're above the breakout at 289. On Tesla stock, we were up 1.02% today as Tesla is continuing that bull breakout above 167, and I said above 167, we would likely go close the gap at 177. Whether or not we do is to be determined, and we simply need to break that resistance at 173, and we should be on our way to that price target. If at any point we get rejected and break below support at 167, you instantly need to get risk off for the retest of support levels at 160, 154, and the gap close at 146. On Apple stock, we were down 0.04% today as Apple is still closing near that upper Bollinger Band, and Apple is now reaching my price targets, which means it could be due for a correction at any point. If we go higher and break out above 174, the next target will be 177. But again, I'm not making any assumptions. We're going to those price targets. We simply need to follow price here and understand the upside potential may not be worth the downside risk. So if you're still long on Apple, I would manage your risk right here at the breakout right around 170. And if we break below 170, we'll be looking for gap fills at 167 and then 158.5. On the financial sector, we were up 0.15% today, but we're still closing below the negatively sloping 50 EMA, and we do have a gap to fill right around 33. But as long as we're below this resistance trend line, we could be trending lower. On the industrials, we were down 0.36% today with price action back below all the moving averages, and the longer this is occurring, we could be heading back into a bear trend. The healthcare sector was down 0.22% today, getting rejected from that resistance at 134, so wait to get bullish until we can clear above that resistance. On the energy sector, we were flat on the day, getting rejected below the negatively sloping 13 EMA, and price action is back below all of the moving averages, continuing into the bear trend. So the next downside support will be down here right around 76. So jumping back over to the S&P 500, there is very little upside reward right now, so you need to be very cautious if you're bullish, and you need to manage risk right here at 411 on SPY. And make sure you're not getting overly leveraged in a boring and sideways market. There's going to be a very large breakout from this range, and we're not making any assumptions about the direction of the breakout. We are going to let the price action do all the talking. Sometimes it's better to make no trades until the chart presents itself, and right now the chart is doing a lot of sideways consolidation, and we have no clear direction on the breakout, so we simply need to wait for the price action to tell us, and then we can trade in that direction. Sometimes as a trader, you need to have the discipline to do nothing or trade very small position sizes when you're stuck in these very sideways choppy markets. There could be a lot of money to be made trading the range as long as you understand to only do so at support and resistance levels, and as long as you're trading between the range with great risk management, you can still do very well in this market. Don't get frustrated and don't get impatient. Simply wait for the chart to present itself and then be prepared to take action. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. I also have my own trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join the Stocks Channel Discord or Bank Trade Alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.